Welcome, everybody, to another episode of SF Live. Thank you so much for joining us. And today we'll discuss how silver is squeezing the investors, or if it really is, or is this just the opportunity of a lifetime? And we got the right person on the call here with us here in our virtual studio. It's Garrett Goggin. He's an editor at the Silver Stock Analyst, and really excited to have him on. First time I'm chatting with him. Really curious to hear his views on the silver price. We're scratching $18 again. And let's see if that really important mark holds up today and over the coming weeks as well as we come into a weaker month of September. And before I bring my guest on, you guys, if you watch, if you watch more often, I know you know what's coming, and I have to torture you for a second. Follow us on YouTube, follow us on Twitter, hit that like and subscribe button. It helps us tremendously with the algorithm, especially if you're a silver investor or if you want to share the silver opinions around. Make sure to share it as well. Thank you so much. And one last thing. Deutsche Goldmesse is around the corner. Our conference in Frankfurt happening November 18th and 19th. Don't get fooled by the name. We also have silver companies presenting. It's free to attend. It is in person. 35 fantastic companies, 6 amazing keynotes, and really, really looking forward to hosting. Well, now, Garrett, thank you so much for coming on the program. Thanks for making the time.
Yeah, thanks for having me, Kai. It's always nice to talk with you and talk about silver stocks.
We'll get to that, of course, and really appreciate it. And Garrett, first things first, I saw you took your kids to the NASA launch, or the one at NASA launch there. How did that go?
I went okay. We went out and saw our SpaceX launch last year, and SpaceX is great. SpaceX, they pop them off. They popped off 40 rockets already this year. They do it consistently. It cost them $2 million to shoot off a rocket. NASA, they got years of overruns. It cost them $2 billion, never mind another almost $1 trillion that they spent on Artemis. And, we want to love it and we want to believe it, but NASA just can't get their act together. And to be honest with you, I look at it as, being symbolic of, our government, U.S. government as a whole. They can't get anything done these days. Hopefully SpaceX ends up taking over the deep space exploration and be a lot smoother process from there.
Be very
Instead of
interesting. Be
constellations.
very
Yeah.
interesting. Yeah, absolutely. I've been watching that as well and following closely, and I've seen your Twitter post about it as well, so I was quite
All right.
curious
Good
as
luck.
well. Do you look at the space exploration theme also from a silver angle?
A little bit.
Far-fetched
So
question, by the way.
yeah. No, silver's pretty, it's an industrial metal, so it is used in, wiring. Usually, it's, in applications for the consumer. So they only use, a little bit of solder to connect the wires. But in military applications, they use silver to make the whole wires because it's the ultimate conductor of electricity. So, actually, Keith Newmer and I were joking around one time about Tomahawk missiles. Supposedly, Tomahawk missiles contain, I don't know, like 100 or 200 ounces of silver in each Tomahawk missile. And Keith is like, well, maybe we should look at Afghanistan for some mining claims and go mine all those Tomahawk missiles.
No, interesting. Now, it's a far-fetched question, but I'm trying to make that segue to now have a silver discussion, obviously,
Yeah,
right?
sure.
As I mentioned in the intro, silver is scratching the $18 mark again, from coming down from almost $19 again. What is weighing on the silver price right now? And as I mentioned, I'm titling the video "How Silver is Squeezing the Investors." It is tough to stay patient with the precious metal right now. What do you think?
Yeah. Yeah, it's all correlated. The Fed's reducing liquidity, although, I think they are pretty much on hold right now. They can't raise rates anymore. Every time they raise rates and every time they try to withdraw liquidity, the whole market crashes. Stocks crash. Gold crashes, silver crashes, all the stocks crash. It's just an absolute disaster. And the Fed can't let that happen again. So I think in the end, like I know in the end the end game is inflation. We're already seeing it right here. It's not a politically acceptable outcome for the Fed to let markets crash. I mean, it's not going to happen. So therefore, sooner rather than later, this whole market's going to start turning around, and it's going to end up, being inflationary, where stock price go higher, silver goes higher, gold goes higher, real estate goes higher, everything goes higher. It's an asset bubble. That's the Fed's game. You need to keep asset prices moving forward, or else it's game over. And there's people out there that call for like disinflation and deflation. Looking for gold at 800. I'm like, it'll never happen, because if that happens, then real estate will be down 75% in price. Everyone in the country will be bankrupt. The Fed would never let that happen, and that's the key. The Fed has control over that, over the printing presses and liquidity. They never allow that to happen. They much prefer inflation, and that's where we're going to end up.
They much prefer interesting because they're like Powell's fighting words were quite harsh actually,
Yeah,
coming out of Jackson Hole, right? And he
yeah,
said, "Oh, he's extremely hawkish, going to keep raising rates."
yeah.
Um, how does that fit in?
They always talk tough until it all falls apart. And when it all falls apart, then they stop. Then they have to
Yeah,
reverse their course and they have to bail out the banks. They're going to bail out, probably the mortgage companies. They're going to bail out, God, the commodity producers. What are they going to? Are they going to industrialize the whole utility sector now due to the high electric prices all over Europe and, in the United States due to natural gas? I mean, it's crazy what we're getting into. And that is the end game. And that's why you own silver. That's why you own gold, because it's going to be a huge inflationary spiral that we're experiencing right now.
interesting. Yeah, the Fed keeps referencing unemployment numbers and things like that to sort of boost the interest rates and say,
Yeah,
well, inflation, we need to control it as long as unemployment stays, sort of in what do you call it, intact. It's like
yeah,
we're creating jobs here. We're definitely not in
correct.
a recession. So let's keep raising rates. But how long do you think they can do it? Let's be realistic here.
It can. I think we're in a recession right now. I think we've been in a recession over the past, 3 months. You look at a lot of, economic numbers, and it's, a recessionary time right now. Due to negative GDP over 2 quarters, which they're trying to change the definition uh, of recession, and they're trying to change the definition of like definition or something. It's crazy what they're doing right now. But we've had 2 quarters of negative economic growth, and that is a recession.
And another word that is being thrown around quite a bit is stagflation as well. You have a slowing or shrinking economy, and and
Yeah.
and lower pricing as well because the oil price is down from its peak at about $120 a barrel.
Mhm.
How does that fit in? Like, because that's sort of the antithesis to like higher silver and gold prices, I'd say.
What, that you have higher, that oil prices
No,
are higher
no,
here?
that oil prices are lower, inflation is going down. The Fed doesn't have to
Yeah.
raise as much, or it feels confirmed in their course, right? That they
Yeah.
have to raise. So
I got 3 little kids. I go to Costco, right? And I go once every few weeks. I used to spend $500. Now I spend $600. Like, and that is over a span of like less than a year. Like, inflation is here, and it's strong, and it's bad, and people are getting crushed right here because of it. So the fact that commodity prices spiked up so high and that they're finally rolling over a little bit, prices don't decline. Like, the steak that you buy, the hamburgers that you buy, they're not going to cut the price of it. When the price goes up, it stays up. It doesn't go down. So, the fact that inflation has been moderating, it's good. That means inflation is not climbing as fast as what it was, but it's still, it stays high, and you lose that purchasing power of your dollar.
yeah, no, exactly. Especially we don't see really wages increase too much. I think from what I've seen, like it's stayed fairly or flat wage rates as well from what I'm seeing
Yeah,
here as well.
correct.
So really
Yeah.
interesting, really interesting. Silver at $18. Let's talk from a technical point of view as well.
Mhm.
It's been dropping again massively this morning, and gold is being sold off as well in unison there. What is weighing on silver and gold, especially silver, in the
Yeah.
short term here?
It's the Fed. It's the Fed's, hawkish, rhetoric that, when push comes to shove, they can't raise rates anymore. They're going to have to cut at a certain point and provide more liquidity. And it's weighing on the stock market. It's weighing on gold. It's weighing on silver. And, I follow a lot of indicators. I track the commitment of traders, and, there's some interesting things going on right now. The managed money, which are small traders, they are short. They're usually never short. They're always long. They're only short in small periods that, mark major bottoms in the silver price. And, I did an interview a few weeks ago, and I'm like, listen, over the longer term, we're going to look back in a year from now, and this period right here is going to be one of the best times to be involved with the silver market. It's going to be mark a low. So, I was called out on that regarding my timing, but, it's a longer term thing. It's not a day or a week. It's just, a year from now, we're going to look back, and this is going to be a major bottom. The commercial traders of silver, they're basically long at this point. They're always short. You look at the inventory. Someone took down 26 million ounces on August 30th of silver inventory. Silver inventory at the COMEX is only 50 million ounces. It's a low it's been in, God, years. And you compare that to a huge open interest, and there's not much silver left.
Did you say 50 million, 50 million ounces?
50 mil registered
Yeah,
ounces, yeah,
that's
COMEX.
not a lot at all.
Yeah, no,
That-
no, no. Yeah, but industrial demand, you keep on using it for solar, and you need, almost an ounce for each solar panel. And solar is a tremendous driver of silver demand, and other industrial applications. And it's an industrial metal. It's just silver's caught up in like this whole, it all goes up and down together, dependent upon the Fed. The Fed's tight, then the stock market crashes, gold and silver crash, and the Fed starts easing again and providing liquidity. Gold and silver are going to go through the roof because it's obvious what the end game is, and it's going to be inflation, and you need silver and gold to protect yourself.
Yeah, interesting. You mentioned gold and silver going in unison, but and that's my personal opinion. I feel like silver has decoupled a bit from gold. It's more trading like a tech metal, and especially with the recessionary fears and the recession that we're looking at. And again,
Yeah.
it's by definition whether we're in a recession or not, right?
Yeah.
It is trading lower than gold. I feel like gold is still hanging in there.
Yeah.
On a percentage basis, but while silver has been sold off more sharply. Do you think
Yeah.
silver will recover more sharply as well?
Yeah, silver is like gold on steroids, and silver's more volatile than gold. So when gold moves 2%, silver moves 4%. Now, and I watch margins. I calculate the average all-in sustaining cost for the gold miners and the silver miners. And the silver miner margin right now is it's only 1%. Like they're basically flat. It costs them about $18 per ounce to get an ounce of silver out of the ground. So therefore, the average miner is not making money versus gold. Gold always has a higher it's a higher margin business than silver. Right now, the margin is still, God, it's 54% as far as an operating cash flow basis. So the gold miners are a lot more stable, whereas silver is a lot more volatile. So silver is a volatile metal. The miners are even more volatile than the metal itself. So you're invested in like pure volatility, and you're just hoping to catch one of these big moves. But let me say one thing. I've been working on an article called Defense Wins Championships. All right. So when investors first get involved with the silver sector, the reason they get involved is because they think silver's going to the moon. And they're like, all right, when silver goes to 50 next month, then which companies are going to go up the most? And then they always get exposure to the worst, highly leveraged, closest to bankruptcy, highest cost miners they possibly can. Because if silver explodes, these basically bankrupt miners are going to go from 10 cents to $10 overnight. But you're betting on like a once in a lifetime occurrence. You can't play football that way. You can't invest that way because these companies, they lag forever because they lose money. They keep diluting shares. If you look at the share count's growing like a 25% CAGR over the longer term, and you can't keep up with that. Core mining, basically, is a banker's best friend, is an investor's worst nightmare. That company was at $300 a share back in the 90s. Now it's at $2 a share. It's down 98%. Why? Because of the dilution. You need to stay away from the companies that dilute. You need to find a good coach. You need to find good management. I go to all the conference. I know who are good guys. A lot of these CEOs, they don't care about the share price. All they care about is putting their $300,000-$500,000 salary in their pocket every year, and they dilute shareholders to do that because the companies don't make any money. You need to avoid companies like that. And then, in order to play a strong defense, you need big boys. You need strong dudes and fast dudes. And the way we like to think of that in the mining business is through margins. Like I just talked about, the silver miner average margin is 1%. But there's a couple companies out there right now that, due to their extremely high grade projects, they are producing silver, going to be producing silver at less than $10 an ounce. So whether the price of silver is $10 or $20 or $30, they're making money every step of the way. And that's what you need to look at. These are the companies that come out ahead because they generate a tremendous amount of profits that they use to enhance shareholder value through share buybacks, dividends, and smart accretive reinvestment of capital.
Oh, very smart comments there. Absolutely. And do you want to share some names of your cornerbacks and linemen?
Yeah. Well, you know what? I don't know. I'm kind of comparing them to the 1985 Bears. The greatest defense of all time. So you got your refrigerator, William Perry, the fridge, right? There's a company out there, Mag Silver, right? Mag Silver is jointly developing Juanicipio with Fresnillo Mining. That's about 700 grams a ton. They are coming in production right now. They're commissioning their 4,000 ton a day Juanicipio mill. And the thing that's interesting about Mag, their ore body is the best in the world. It's extremely wide width, extremely high grade. But Fresnillo operates Saucito right across the way at 8,000 tons a day. Now, a lot of people don't know this, but but Juanicipio will likely be running at 8,000 tons a day also in 3 years because it's the same ore body. It's the same company, Fresnillo. It's the same mill. If you look at MAG's presentation, they built their mill. They have a whole open space right next to it. So you got to take whatever numbers you run for MAG and double them because that's what we're looking at. And MAG's costs are extremely low. It's like $7-8 an ounce. So even if silver's at 10, it doesn't matter. Because they're going to be making money. And it's important, you need to be making money. If you're not making money, you're losing money. And if you're losing money, you need to plug it through dilutive stock sales, share deals. And once you start doing that, the shares outstanding keeps increasing. That company is never going to get caught up. Like it's going to be, the chart is a straight line down with a couple spikes up along the way, but eventually it's going to go to its intrinsic value of zero over time.
No, absolutely right. And Core is the best example for that as well. And they're now struggling with massive debt on the books as well. And
Oh
Mac is
yeah.
obviously the example the other way around. Fantastic. There are not many silver producers though, right? Or pure play silver stories pretty much don't exist anyway because they always have byproducts to make it. Because silver is not a pure play, usually not a pure metal that you can find anywhere out
Yep.
there.
Yeah,
So,
no doubt. So I cover this silver producers, and a lot of them have gone to gold because of the higher margins over the past few years, like Silver Standard, right? Now it's SSR Mining, Core's gone to gold, Hecla's gone to gold. But you know what? There's a couple of them that are interesting that are like pure silver. There's Aya Gold and Silver in
Morocco.
Morocco. And then there's New Pacific in Bolivia, and they own a project called Silver Sand, which is 100%, silver. So, that's the thing that gets me really excited being a silver specialist is, to be able to find like a pure, silver play because it's very rare and they don't occur very often in nature. And there's two of them right now.
Absolutely. How do you play the space? Like, I mean, I don't mean by names, but do you buy more of the index funds or do you just stick like closely to the individual stocks?
No. So I write the Silver Stock Analyst, right? And I've got a fave five. So I covered like 25 different silver producers and I list my fave five, right? So we do a silver portfolio. My silver portfolio blows away the silver ETF, the SIL ETF. Right now, the SIL ETF is down, God, 37% year to date. My fave five, they're down. They're down 28%. But basically, I beat them. I'm beating them by 10% this year. Over the longer term, I beat them consistently. Let me see. The Silver Stock Analyst fave five is up 132% over the past 7 years versus the SIL ETF, which is basically flat. So I'm generating alpha compared to that ETF. That ETF it's an easy benchmark, to be honest with you. It's got companies like Korea Zinc and, it's got Core Mining, which is an easily avoid. So yeah, my job, it's a little easier than usual.
No, fantastic, fantastic. So you sort of answered the question already, but in face of the recession that we're in right now, and like I've been talking with a lot of other analysts as well, and they're recommending dividend stocks. But the miners, especially the silver miners, are usually not known for dividend policies and or even massive buybacks or so. Barrick and Newmont, yes, they are at a right around 5.5% dividend yield, but I don't think Pan American or any of the bigger like silver plays or even First Majestic pay a dividend. Like,
Tell you what, the way a few of them pay small dividends. First Majestic, like 0.3%. Pan American's dividend is 3%
oh
right
wow,
now.
okay, I wasn't aware of that. Fantastic.
Yeah, Silver Core has been a good one. Like it pays 1%. And Silver Core gets a bad rap being in China. But if you financially look at that company, they generate profits quarter after quarter after quarter. They have never diluted any shares. Ray Fang's done a great job operating that company. It's just got the China discount. But I tell you what, you need to look at free cash flow generated because they use that free cash flow to, number one, pay dividends, number two, buy back shares, and number three, to invest in accretive projects. So you can do a free cash flow yield, you can do a dividend share buyback yield. And if you start looking at that, this is how I look at the silver miners. And I look for companies with high free cash flow yields, share buyback plus dividend yield. Then it starts getting up a little bit higher. But right now it is like with the average miner is only at a 1% margin. But I look for those companies out there with extremely high grades, with extremely low costs. So even though the price of silver is $10, these companies are still going to be generating profits that they can use to drive shareholder value. Silvercrest Metals is another one. Silvercrest and Mag are interested because they're both going into production right now. Eric Fear is one of the all-time good guys in the business. He built Silvercrest Mining profitably. He did a really good job for shareholders. He owns a good chunk of change in the company. Some of these management that only get their salary, they don't own any shares in their company. You cannot invest in companies like that. So Eric Fear is a good coach. He's a good guy. And then Les Chispis has got grades of about 1,000 gram a ton, gold, silver equivalent. It's crazy. And they're coming into production right now. So I'm watching that one really closely. And again, that's another one. If silver goes to $10, it doesn't matter. They're still going to be profitable. And you need to look at this. This is what the Fave Five is all about, finding these companies like this.
Absolutely, sounds fantastic. Maybe one of a philosophical question, you brought it to mind here, is value versus growth. Do you actually want the miners to pay dividends, or do you rather have them buy additional assets or explore their own brownfield sites? Like I'm sort of torn because I think the miners should either buy assets or invest in exploration rather than pay a dividend.
Yeah.
But
Well,
that
you
is
know
my
what?
my opinion.
It all comes down to the coach, right? You need to find a good coach who's going to allocate resources the right way. You get a company like Hecla that paid 300 or $400 million for
Onyx,
their gold assets in Nevada.
Klondike's,
Oh, yeah, Klondike's. And then they spent another 100 mil capex. They never got a dime back from that. They just threw 500 mil down the drain. So they get Hecla's got Greens Creek, which is a good mine for them, but they take all that extra money and they just throw it away. It seems like every acquisition they do. However, you get guys like Eric Fear that do smart accretive acquisitions. You get guys like Keith Neumeyer with First Majestic that buys assets at the right price. His first few mines, he was buying them at like $6 million, $10 million, and squeezing, all the free cash flow, all the profits out of them. You need to find management like that is really focused on the bottom line and knows how to squeeze value from their assets, because you get a lot of management out there. They're paying 500 mil a bill. They never get their money back. It's just they're flushing money down the drain. So find the right coach.
Good answer to that, I think. Yeah, it's like it's right in between value and growth. I don't think there's a
Yeah.
right answer really. So, no, fantastic, Garrett. Time has flown by, like amazing. Really, really great conversation. Where can we
Yeah.
find more of you?
Go to Stansberry Research. Follow me on Twitter. I write the Gold Stock Analyst and the Silver Stock Analyst is combined with the Gold Stock Analyst at John Duty. So if you're interested, find out more. And then one more thing, the silver sector, it's extremely volatile. It lags. But when it goes, that 5% of the time, it goes to the moon. And that's what we're all hanging out for. And that's why we want these high margin defensive plays to keep us in the game during these hard periods. So when good times come around again very soon, they take off to the upside.
Fantastic, great closing remarks. Really appreciate it, Garrett. Thank you so much for joining us. Really appreciate
Thanks,
your
Todd.
time.
Good.
Fantastic.
Nice talking to you.
Everybody else, thank you so much for tuning in. We were joined by Garrett Goggin over at the Silver Stock Analyst, Gold Stock Analyst, there together with John Duty. Great insights on what is happening in the silver markets right now. He dropped some really good names in the silver space to take a closer look at and maybe invest in. Not investment advice, just financial education, but do your due diligence. Quite interesting. Silver is definitely beaten up right now. Let's see how long you can stay solvent before the market goes sane again, I guess, right? And
Yeah.
make sure to hit the like and subscribe button as well. And join us in Frankfurt if you can. Thank you so much for tuning in, and we'll be back with more. Thank you so much.